Are you thinking about buying a house in Florida? Think again. The Sunshine State's real estate market is going through a massive correction, and some cities are at extreme risk of a housing crash. In today's video, I'm breaking down the 10 worst cities to buy a house in Florida right now. Stick around until the end because some of these cities might shock you. Hit that subscribe button and let's dive right in. Tampa. Let's kick things off with Tampa, one of Florida's most vulnerable housing markets right now. Tampa could be facing a very high risk of a housing market crash with significant price declines in 2025. The numbers tell a grim story. Home prices in Tampa have already dropped 0.9% year over year as of January, and they've fallen 1.6% just between October 2024 and January 2025. That might not sound like much, but in a market that was red hot just 2 years ago, this is a massive warning sign. The Tampa Bay area is now showing pending sales down 12.5% annually, and the median list price has decreased by 4.5% compared to last year. What's driving this decline? Tampa experienced an absolute explosion of new construction projects during the pandemic boom. Builders were racing to meet demand from out-of-state newcomers fleeing high-tax states. But now there are over 5,600 homes sitting on the market in Pinellas County alone, the highest level in 7 to 8 years. Inventory is up a staggering 68% year over year, and homes are taking 77 days to sell on average. The migration wave that once fueled Tampa's growth has significantly slowed down, leaving an oversupply of homes with fewer buyers to absorb them. For anyone thinking about buying in Tampa right now, you're essentially catching a falling knife. This market has further to drop before it finds a bottom. Winter Haven. Coming in at number 2 is Winter Haven, a smaller market that's partially tied to the Orlando and Tampa metro areas. This city is flying under the radar, but it's facing serious trouble. The data is alarming. Winter Haven experienced a year-over-year home price decline of 0.9%, and prices dropped 1.2% from October 2024 to January 2025. Listing prices in the Lakeland Winter Haven metro area have plummeted by 2.06% year over year, making it one of the steepest declines in all of Florida. What's particularly concerning about Winter Haven is the massive inventory buildup. There are now approximately 4,800 homes on the market for sale in the greater Lakeland area, compared to just 3,000 before the pandemic. That's a 60% increase in available homes. This isn't a coastal city dealing with hurricane insurance issues. This is a landlocked market that's simply overbuilt. Developers went on a construction spree during the pandemic, and now all those homes are competing for a shrinking pool of buyers. The market dynamics are brutal. Too much supply, not enough demand, and sellers who are increasingly desperate to move properties. West Palm Beach. West Palm Beach rounds out the top 3 cities at very high risk of a housing crash. This once exclusive market is now experiencing a dramatic shift as luxury buyers become increasingly cautious and inventory levels surge. The numbers are concerning across the board. The broader Miami-Fort Lauderdale-West Palm Beach metro area has seen listing prices drop 1.97% year over year, one of the most significant declines in Florida. West Palm Beach specifically shows inventory up 26.6% compared to last year, and homes are now taking a median of 105 days to sell. That's over 3 months on the market. What makes West Palm Beach particularly vulnerable is its position in the luxury market segment. During the pandemic, wealthy buyers from New York and other high-tax states flooded into South Florida, driving prices to astronomical levels. Now that wave of migration has slowed to a trickle, leaving an oversupply of high-priced homes with fewer qualified buyers. Pending sales price in the West Palm Beach area has turned negative, meaning homes are selling for less than they did a year ago. This is a clear sign that the market has shifted from seller-friendly to buyer-friendly, but even with better conditions, buyers remain cautious. Many are waiting for prices to drop further before jumping in. Naples. Naples, known for its luxury real estate and affluent retirees, is experiencing a significant market correction that's catching many by surprise. This high-end market that once seemed invincible is now showing serious cracks. The data reveals a troubling trend. Naples listings have surged 28.6% year over year, with 7,932 active listings as of the most recent data. Even more telling, there are currently over 8,000 homes for sale in the Naples area, with approximately 2,731 of them, that's 34%, having undergone price reductions. While Naples sellers are more resistant to price cuts than other Florida markets, the sheer volume of homes sitting on the market tells the real story. Here's what's particularly concerning about Naples. Homes are taking a median of 140 days to sell, the longest in the entire state of Florida. That's nearly 5 months on the market. When luxury properties sit that long, it's a clear sign that sellers' expectations are still out of touch with what buyers are willing to pay. Naples attracted a massive influx of wealthy retirees and second home buyers during the pandemic, driving prices to record highs. The median home price in Naples reached $997,800, making it the most expensive market in Florida. But now that same demographic is becoming more selective and price sensitive. Sarasota. Sarasota is number 5 on our list, and this Gulf Coast city is facing one of the most dramatic inventory buildups in the entire state. What was once a seller's paradise has quickly transformed into a buyer's market with significant downward pressure on prices. The inventory numbers are staggering. Housing inventory in Sarasota has surged to over 4,000 homes on the market, the highest level in nearly a decade. The North Port Sarasota metro area shows inventory up 14.6% year over year, with 13,542 active listings. Days on market have spiked to 91 days, also the highest level in the last decade, indicating that buyers have lost their sense of urgency. Some submarkets within Sarasota could see even steeper declines. The median list price has already started trending downward, and with months of supply now at 5.5 months, well into buyer's market territory, sellers are losing negotiating power rapidly. Like much of Florida, Sarasota experienced a massive construction boom during the pandemic. Builders ramped up production to meet seemingly endless demand from out-of-state buyers, particularly retirees from the Northeast and Midwest. But that migration surge has slowed dramatically, leaving builders with completed homes that aren't selling as quickly as projected. Real estate experts note that Sarasota's market is clearing out would-be sellers who held on hoping for a rebound. Those who need to sell are now accepting lower prices and offering concessions just to get deals done. Orlando. Orlando, the theme park capital of the world, is experiencing a housing market hangover after years of explosive growth. This tourist hotspot that saw massive pandemic-era demand is now facing a significant correction. The statistics paint a concerning picture. Orlando's pending home sales are down 9.5% year over year, and the pending sales price has declined significantly. Homes are taking approximately 2 weeks longer to sell than they did last year, with a median of 77 days on market. Inventory has grown by nearly 20% year over year, reaching 7.0 months of supply, firmly placing Orlando in buyer's market territory. The median list price is hovering around $510,000, but with so many price cuts, actual sale prices are coming in lower than initial asking prices in most cases. Orlando's housing market was supercharged during the pandemic as remote workers discovered they could live near Disney World and Universal Studios while working for companies based elsewhere. Investment buyers also flooded the market, purchasing properties to rent out as short-term vacation rentals. Now, both of those trends have reversed. Remote work flexibility has decreased as companies call workers back to offices, and the short-term rental market has become oversaturated, reducing profitability for investors. Many sellers are pulling their homes off the market rather than accept current price realities. But this strategy only works temporarily. Eventually, sellers who need to move will have to come back to market and accept lower prices. With mortgage rates remaining elevated and consumer sentiment weakening, Orlando buyers have every reason to wait for better deals. Port St. Lucie. Port St. Lucie on Florida's Treasure Coast is number 7 on our crash list, and this rapidly growing area is experiencing one of the most dramatic inventory explosions in the state. The numbers are eye-opening. Port St. Lucie's active listings have surged 24.5% year over year, reaching 6,478 homes on the market. This represents record high inventory levels for this market. Price Forecast Score ranks Port St. Lucie at just 37 out of 100, indicating significant downward price pressure due to the high amount of housing inventory and homes sitting on the market for lengthy periods. Home values in Port St. Lucie have already declined approximately 5% year over year, and real estate analysts expect those declines to accelerate. The combination of elevated inventory, increasing days on market, and growing seller desperation creates a perfect storm for continued price drops. Buyers who purchase in Port St. Lucie today could easily find themselves underwater within a year as prices continue falling. The market dynamics show classic signs of oversupply. When there's more supply than demand, prices must adjust downward until equilibrium is reached. With Port St. Lucie's inventory at record highs and still climbing, that equilibrium point is likely well below current price levels. First-time homebuyers who flock to Port St. Lucie for affordability are now finding that prices, while lower than coastal markets, are still stretching their budgets when combined with high mortgage rates, insurance, and property taxes. Many are choosing to continue renting rather than overpay for homes that might decrease in value. Cape Coral/Fort Myers. The Cape Coral and Fort Myers area on Florida's southwest Gulf Coast comes in at number 8, and this market is particularly troubled due to the combination of overbuilding and hurricane damage concerns. The inventory situation in Southwest Florida is dire from a seller's perspective. Cape Coral shows 15,425 active listings, up 24.8% year over year, the highest on record for this. Market the Lee County area, which includes Fort Myers, has an astounding 9,600 homes on the market. Sales in Southwest Florida declined 15.5% year over year, showing that despite more options, buyers remain cautious. Both Cape Coral and Fort Myers have experienced home value declines of 5% year over year, matching Port St. Lucie's drops. The Cape Coral market is particularly oversaturated with spec homes, properties built by developers on speculation without pre-committed buyers. During the boom, this strategy worked beautifully as homes sold before completion. Now these homes sit empty, with builders forced to offer aggressive incentives like mortgage rate buydowns, closing cost credits, and price reductions just to move inventory. Fort Myers faces similar challenges, with the added complication of being a more established market with older housing stock. Many homes in Fort Myers need updates, but sellers who invested in renovations during the peak market are finding that buyers won't pay premiums for upgrades when so many other options exist. Ocala. Ocala, located in north-central Florida, is number 9 on our list. This market is particularly interesting because it's not coastal, yet it's still facing significant housing market pressures. The data shows same trends across the board. Ocala's active listings have surged 17.8% year over year to 4,947 homes. Even more concerning, listing prices in Ocala have dropped 3.04% year over year, making it one of the steepest price declines in all of Florida. Days on market have increased to 68 days, the longest period in the past 7 years for this market. Ocala attracted significant attention during the pandemic from retirees and remote workers looking for affordable Florida living without the coastal price tag or hurricane risk. Builders responded by developing numerous new communities, assuming the demand would continue indefinitely. It didn't. As remote work became less flexible and the retirement wave slowed, Ocala was left with far more homes than buyers to fill them. The affordability that once made Ocala attractive is being eroded by rising property taxes, insurance costs, and HOA fees in newer developments. Additionally, job opportunities in Ocala are more limited than in major metros, making it less attractive to working-age buyers. First-time homebuyers who might have considered Ocala as an affordable option are now finding that with high mortgage rates, the monthly payment on a $300,000 home in Ocala isn't that much more attractive than waiting for prices to drop in more desirable locations. Gainesville. Rounding out our top 10 is Gainesville, home to the University of Florida. Despite being a college town with a built-in rental market, Gainesville is facing serious housing market headwinds. The problem isn't that prices are currently crashing, It's that they're poised to fall dramatically. The market is experiencing the same inventory buildup, extended days on market, and seller concessions that preceded price crashes in other Florida cities. What makes Gainesville particularly vulnerable is its dependence on the university market. While the student population provides rental demand, it doesn't create strong home buying demand. Most students rent, and many leave the area after graduation. The market depends heavily on university employees, local professionals, and retirees, a relatively limited buyer pool that can't absorb excessive inventory. For many potential buyers, the total cost of ownership in Gainesville no longer makes financial sense compared to renting or buying in more economically diverse markets. When families face financial pressure, sending kids to expensive universities becomes harder to justify, and enrollment can decline. While the University of Florida remains popular, any enrollment pressure or shift toward online education could significantly impact Gainesville's housing market. So there you have it, the 10 worst cities to buy a house in Florida right now. Let me know in the comments below. Thanks for watching, and I'll see you in the next one.